Welcome back to the Hunter of Dividends YouTube channel. We're going to take a look at a big name here today, Intel. Intel Inside, we've all heard Intel for many years now. Intel's out of favor. It is a dividend paying stock that at this point is paying a 4.13% dividend. Let's take a look at this company. I'll let you know my thoughts on this one here. If you have any companies that you'd like me to talk about, take one of these dives into the dividend safety and also the valuation using Simply Safe Dividends and Fast Graphs, drop them in the comments below or send me a message to @HuntDividends on Twitter. Happy to cover any of these. I enjoy doing these, certainly. So this is not financial advice, just research, and definitely do your own due diligence. Let's take a look at Intel. Intel is a really complicated story because they were such a fantastic name for a long time. Obviously, in the dot-com bubble, they burst in a big way. And then they had been kind of gradually gaining back from about 2008 or 9 up through 2020. Not a fast grower or anything, but they had been doing a good job. Now you look at the last year, and it's not a good picture here for Intel. Definitely, it's a pretty steady slope down from the 50s down to 35.39, the closing price on Friday, August 5th. So let's take a look at this one. Simply Safe Dividends first. 80 is the dividend safety score here. Definitely a good score. The beta 1.07. I own a little bit of this stock, not a lot. I have been adding just a little bit, and I'll tell you about that more here in a minute. The last 20 years, the dividend growth is 15%. The last 6 years is 6%. So they're definitely slowing down, but the dividend is still going up. We've seen consistent increases, which I like to see. The dividend yield average for 5 years has been 2.51%. Right now we're sitting at 4.13%, so way higher than we had been. The forward PE, 5-year average is 12.5. Right now we're at 15.3. To be honest, the analysts are having a hard time knowing exactly what to say the future estimates for this company should be, because Intel has been struggling of late for sure. The PE ratio is 15.3 compared to information technology 17.5. It's at its 52-week low right now. I think there's an interesting one here. I'm just going to take a quick peek at Simply Safe Dividends. They did a write-up on this one. The slumping PC demand, share losses, increased pressure on Intel's turnaround. The dividend remains safe for now. So sales tumbled 22% in the second quarter, missed guidance by 15%. Margins contracted. Some of this was out of management's control. Global PC shipments, big drop. Intel now forecasts a 10% decline in overall PC sales this year. So let's go down here. Some of the delays for the new server processor definitely scared people as well. CEO Pat Gelsinger, which a lot of people think he could be a good turnaround CEO. So let's see if he can do the job here. Intel's capital spending over the next few years will double the firm's historical norm to fund its turnaround plan. So what's the free cash flow going to do? It could even dip into negative territory, according to Simply Safe Dividend. Management has also become way more optimistic for the future, which we haven't seen it yet, but like they say here, Intel remains a show me story with investors. Valuation expectations appear low. So as long as Intel can stop bleeding market share over the next couple of years, they do believe that it says if we lose confidence in its ability to defend market leading share, we would likely downgrade the company's safety score. For now, they're going to keep it at 80, which is a safe. So I wanted to take a quick look at that. Payout ratio here for Intel, 36%. They're looking at it jumping here. Again, this is in regards to the free cash flow payout ratio is tanking down to negative 367 as well. There is a large amount of money being spent by Intel right now to try to turn this company around. Earnings per share have really dropped drastically. Certainly a concerning look here. 547 down to 396 and an expectation of 232. Earnings per share growth, you see, it was kind of chugging along pretty decent, and then just a massive drop. Shares outstanding have dipped a decent amount. which is nice to see. Return on equity has not been too bad. Operating margin has been pretty good, but it's dropping right now. Net debt, they don't have that much debt, which I like to see. That's certainly one of the reasons that Simply Safe Dividends still has this at an 80. So there's the look at that on Intel. Let's look at the valuation on Fast Graphs quickly here. This is a wild chart because Intel has dropped off so much for their price to earnings because their earnings are just dropping so much. So it's hard to know how to value it. You see the blue line is where this is usually traded at about 17.25 times. And it's a moving target here as we try to figure out exactly what Intel is going to earn. Sales, again, this looks a bit cheap based on normal valuations. The question is, how much will their sales drop? Free cash flow, operating cash flow here, again, staying pretty far below the average. So right now it appears to be a stock that's undervalued. If we look at the future forecast, you'll see how noisy this really is. Operating cash flow, if you go out to an average, you get a rate of return of 45% by 2024, which would be tremendous if those expectations are right. Adjusted operating earnings, there's a wide range of what Intel will earn here. And if we look at this, it's 1.38 rate of return based on operating earnings. So we have a complicated picture here, no doubt. Sales looks better again, 30% rate of return. The whole question here is, do you think Intel can turn it around? Can management get this thing turned around? Are they going to stay a market leader, or is Intel just kind of a dinosaur? Are they going to go the route of a IBM or something like that, where that's really, really struggled? I certainly hope not, because I do own some Intel. This is one of my lower market share. This is one of my lower stocks that I don't have as much of my portfolio in, I should say. Not a company that I'm wildly excited to be investing in. At the same time, valuation is cutting pretty cheap, and a dividend yield of over 4% for a technology name like this. I'll keep adding a little bit here to Intel. This is not one of my favorite names. I do think it's worth a shot here, especially if you think the management team is a good one. So let me know what you think of Intel in the comments below. That's a look at Simply Safe Dividends and Fast Graphs. What's Intel's chart going to look like for the next year? What's it going to look like for the next 5 years? I'm curious what you guys think. Let me know in the comments below. Give this video a thumbs up and subscribe to the channel if you would. I certainly appreciate that. Appreciate all of you, and let's see if we can keep growing dividend portfolios nicely over time. That passive income from those dividend stocks, especially the dividend growth stocks, is really powerful. So thanks for tuning in. See you back next time.